So not too long ago, we had a scenario similar to this scenario. A nurse graduated from nursing school some years ago. And while she was in nursing school and all through nursing school, this woman drives around an old beat up Toyota with like 120,000 miles on it, right? And because she's struggling to live, all this time ago while she's a student, she buys a very cheap car insurance policy. The policy that she buys has the minimum coverage, which in Virginia and North Carolina now is $30,000 in liability coverage and $30,000 in what's known as uninsured motorist coverage. We'll talk about that a little bit later. But these are the minimum limits that you can have in both Virginia and North Carolina. Years go by. She graduates from nursing school and she's an RN. She's a registered nurse. She's making good money, well over $100,000 a year. She goes to school and becomes a nurse practitioner. All right, she's making even more money with that career. So now it's several years later. She's doing quite well. Unfortunately, one day, while she's a nurse practitioner, she hits somebody with her vehicle and causes a pretty severe accident. She realizes at that point that although she's upgraded her life, she has failed to upgrade her coverage, her insurance coverage, and all the way from the days when she was in nursing school. And also, unfortunately, this person that she hit also has minimum coverage. Now, this person files a lawsuit against the nurse practitioner now, and who she ran into, and the medical bills for this person are way over like $150,000. If we go back in time, to the time that she's a nursing student, what could have been done? What should have been done? Hi, I'm Joe Miller, personal injury lawyer and workers' compensation attorney in both Virginia and North Carolina. And although I do only represent the victims of car accidents, the people that are hurt, today I'm really addressing a different audience. I'm really addressing the audience of the potential defendants that I might ever make a claim against one day if you hit one of my clients. I'm also addressing to some extent my clients because you're all also potential defendants, if you ever get into an accident, you cause the accident. In addition, if you're hurt, we're going to talk a little bit about uninsured motorist coverage, which is also important. And basically the main point I'm going to make today is that both for your sake and the sake of my potential clients, or anybody that you may injure in an accident, if your life has a quote unquote upgrade due to a new job, a change in a career, or that you expect a potential future upgrade to your life financially, also an asset upgrade, you intend to buy a home at some point in the next 10 years or so, or any other reason for an increase in income and the upgrade in the amenities you own, it's really important for you to also not forget, under any circumstances, to upgrade your car insurance coverage also. You should be buying, even at an early stage, really, if you can swing it somehow, more than you can afford. I know this sounds a little bit like a car insurance commercial, although it really doesn't, because the car insurance commercials that you see on TV, most of them just tell you, hey, you want to save money, you want to save money, you want to save money. And what are they really hawking at the end of the day? They're trying to get you to buy the most minimum coverage possible because that will save you money. But what are you buying? You're buying a piece of junk policy, okay, at the end of the day. So it's not always the case that you want to save money. First of all, let's just make sure we're all on the same page. Some of you folks may not be familiar with these concepts. Let's briefly take a look at what insurance coverage means in the context of an automobile policy and why it's so important for your life. So when you buy a car insurance policy, much of the cost of the policy is built into what the limits of coverage are. A lot of people will walk around and tell me all the time, well, I had full coverage. I'll ask them what their coverage was. I had full coverage. Full coverage doesn't mean anything. What we need to know is the level or the monetary level of coverage you have. So in both Virginia and North Carolina, for instance, if you buy a minimum coverage policy, which I think what a lot of these companies are hawking, a minimum coverage policy gives you only $30,000 in coverage. If somebody makes a claim against you, it's going to only pay out $60,000 total if there are multiple people that got hurt. Okay, I mean, that's why they call it 30-60. So if you mess up and hurt 3 people, the most they can recover from the policy, now, you gotta be careful. But the most they can recover off the policy is the $60,000, and they got to divvy it up, but no more than $30,000 per person. Okay. Now, if the damages of the person that you injured, like I said, their medical bills in the example that we gave at the beginning are way more than the policy is going to cover, what can they do? Well, they could go and get a big old fat judgment against you in court, is what they could do. And those folks basically would be able to come after you personally to get a judgment. There's also a minimum uninsured motorist coverage that goes along with the liability coverage you buy. It's usually the same level. And unless you specifically reject that coverage, which we don't recommend, by the way, that means that if somebody hits you and they are uninsured, hence the name uninsured coverage, then your policy will go ahead and step in and pay up to the amounts I mentioned before. $30,000 for you if there's multiple people injured in your vehicle, up to $60,000. Let's go back to you potential defendants out there who, might one day cause an accident and hurt somebody, God forbid. Okay? This is really what I want you to pay attention to. So, what is the purpose of car insurance and really all insurance in general? It's really to protect your assets, right? Your assets are the stuff that you own, okay? Because really, if somebody's not insured, is negligent, and hurts somebody, that's the most extreme example, that you have no insurance. Forget about the minimum coverage, but don't say you have no insurance, and you hit somebody, what can happen? This injured person can come after your assets and force you to sell those assets to pay for their judgment that they get against you. In some cases, that can even be with respect to future assets that you don't own now. Okay, now how could that happen? We're going to discuss that in a minute. First, to understand that, let's go back to the example of this nurse practitioner. Okay, back during the time she was in nursing school. Remember, she's driving an old beat-up Toyota. She don't have any assets. She got nothing. Is it appropriate for her at that time to have that minimum $30,000 coverage? Okay, in my opinion, the answer is really no, because I think there's some decent risk, even though she has nothing now. Why? I'm going to tell you why. Because the statute of limitations, meaning how long somebody has to enforce a judgment in Virginia, it's 10 years, but it can be extended by 3 times up to 30 years. So, man, this woman, could have gotten a judgment against her while she's a nursing student if she hit somebody and hurt somebody. And the guy could say, well, she doesn't have anything now, I'm going to wait. And he could wait to enforce it to, 8, 9 years later when she's more successful now as a nurse practitioner, and then enforce the judgment, and bam. Let's go back to our example. Mr. Injured Victim is hurt bad, and he files his claim against the currently broke nursing student. This guy has got well over $100,000 in medical bills, right? And he goes to trial. It was clearly her fault, so he gets a judgment for $300,000, right? She has nothing right now, though. So her car insurance goes ahead and pays the $30,000 limits. That means there's still another $270,000 sitting out there on that judgment that she owes. And what does he do? He takes that judgment and he goes down and he records it. It's called recording it in the court where the judgment took place, in the clerk's office. And for the next few years, he doesn't do a thing about it. Let's fast forward 8 years from when she's a nurse, okay? Now she's a nurse practitioner making well over $150,000 a year in salary. And one day she decides to go and try to buy a house. But finds out that she can't buy a house. Why? Because the $270,000 judgment is on her credit report, and it's showing up and it's preventing her from being able to get credit and get a loan to buy a house. Okay? Not only that, but bam, at some point after she becomes a nurse practitioner, a garnishment notice shows up at her office, taking a substantial portion of her out of her weekly check to collect on the remaining judgment, plus a huge amount of interest for the past 8 years that's been building up. So now she's in a situation where, because she didn't upgrade her coverage for her potential, keeping in mind her potential career, now she's in a situation where she can't buy a house. She's getting money taken out of her check each week, and it's likely not anywhere near enough to pay off this guy, maybe even for the rest of her life. She hires a lawyer out of her pocket, and the injured victim, maybe they'll settle for $200,000 or something like that, but that's as low as that injured victim is going to go at this point. And she has to pay that lawyer out of pocket, as I said. Now, maybe she declares bankruptcy or something like that to try to get out from under this. This is something that this nurse practitioner had not expected in this stage of her life. All from one terrible mistake she made way back in nursing school that she didn't have sufficient coverage for. Now, how could this have been avoided? Well, of course, if she had purchased, let's say, a $300,000 policy when she was in nursing school and knew that she was doing well and was probably going to become a nurse before too long, okay? Yes, it would have cost her probably over $2,000 a year, okay? But that $300,000 would have paid off that $300,000 judgment back then in full, okay? That means, this guy never would have gone to court, right? He would have settled for the $300,000 limits. That would have been the end of it, and he would have been out of her life and would have had nothing to worry about. Now, if this all sounds crazy to you, and you think it doesn't apply to you because, look, you're not expecting an upgrade in your life due to a professional school or a substantial increase in income, and you never expect to truly try to get a mortgage on our home. You don't expect to own a mortgage on our home. There's a lot of folks that fit into this category, and I talk to these folks all the time. It's just, there's a lot can be said for keeping it simple. I mean, as many of my clients have told me, and folks have told me here and there over the years, look, they can come try to get it, but there's nothing to get, right? And it's going to probably stay that way. So if that's your situation, then you could probably ignore this business about upgrading coverage. This is really specifically for people who know either that they haven't upgraded their coverage and they've got more income now, or they're going to get a substantial increase in income at some point in the future. Really, it's going to be a very hard time for you to find any attorney that's going to go look at a situation like what we looked at before, even if somebody has terrible injuries, okay, and go after somebody that really doesn't have anything and can't expect to get anything, okay, at any time in the future, right? For instance, let's say somebody's older and disabled and they really don't have much coming in. I don't know any attorney that would go get a big old judgment and then garnish some meager amount of wages that somebody's getting or try to get a hold of some disability policy or something to try to get money for a judgment. They're just going to try to settle for the insurance limits is what they're going to do. So that's what I'm saying. Again, I could be wrong about this, but I think that's pretty much the way it is with those kind of things. What attorneys are going to be looking for are somebody that's in professional school, some indication that this person is going to have an increase in income later on, and then they may very well go ahead and go after that person and get a judgment rather than settle for the insurance limits. If you're planning on starting a family or buying a house in the next 10 years and you expect a substantial increase in your income in the next 10 years, you really need to buy more coverage, and you need to do it now, not later. Listen, if you never need to use the coverage, you're going to be having some choice words for me, and that's fine, right? That's perfectly fine. I get it. But if you hurt somebody or get in and cause a terrible accident, you're going to thank me. Really, if you are already on the road to substantially increasing your income and you're thinking about buying a home, and you haven't gotten in and caused an accident yet, what you really want to make sure you do is when you get that house, you want to make sure you buy umbrella coverage. If you own a home and you have umbrella coverage, that's going to pick up where the $300,000 liability policy left off. Let's say they get $1 million judgment. The $300,000 policy will pay the first $300,000, and your policy on your home will pick up the other $700,000. There's something called a homestead exemption, but it doesn't provide much help. The person that got hurt real bad, has got a big old judgment against you, is going to be able to come after you, force you to sell your home. They're going to record that judgment. Your property is going to be encumbered. You will not be able to sell your home. They'll force you to sell your home to pay off the judgment. So you don't want to be in that situation. So make sure when you purchase a house that when you get your homeowner's insurance, that you make sure there's a good, solid personal liability or umbrella coverage that's within that policy. It doesn't cost much. I think it's like $150 a year or $200 a year or something like that. It's very inexpensive because it's rare that you have to tap that money. Before I end this, I want to talk to my clients now and my potential clients. Okay, we're going to switch over. And we're going to talk about uninsured motorist coverage a little bit. Let's say you're the one that gets severely injured. And you get hit by an uninsured motorist. That's why it's called uninsured motorist coverage. or somebody who has the same level of coverage, because if they have the same level of coverage, the coverages cancel out, which means you don't have any uninsured motorist coverage. So maybe you have decent health insurance, but there's big old copays. And you might have some pretty nasty injuries that are going to debilitate you for a while. So in those circumstances, you also want to have a lot of uninsured motorist coverage. You want to get as much as you can afford. If you're in a situation where you have a job, for instance, that pays decently and you might be out of work for a while, you want to make sure you've got enough that your uninsured motorist is going to pay you, okay, for your injuries. If you have, let's say, $150,000 in medical bills and your health insurance pays off a good amount of it, you can claim that in Virginia, more likely than not, that your uninsured motorist coverage is going to pay out the full amount of their limits, and you'll at least have some money to get by for a while as you recover. So the bottom line is, folks, don't get caught with your pants down, okay? You got to buy as much coverage as you can possibly afford, and you got to do it especially if you accept a substantial increase in your income, substantial increase in assets. You intend to buy a home in the next 10 years. You really need to increase your car insurance coverage as much as you can afford. Even if you can't afford it, scrape by, tell your parents what I'm telling you, give them the message too. Okay, if you're in school and you're in professional school especially, tell your parents you need better coverage. If nothing happens and you spend all that money, you're going to be cursing me and saying Miller said to spend all that money and I didn't need it. Great, I'm fine with that. But if you hurt somebody real bad and you cause an accident, you're going to be thanking me, or you get hurt, God forbid, you're going to be thanking me that you had either the uninsured motorist coverage or the liability coverage to the maximum amount that's going to pay on any judgment that might come against you. So I really hope this video has been helpful for you, and that you take my advice, and when you upgrade your life, you expect to upgrade your life, you also upgrade your coverage, okay? Again, I'm Joe Miller, personal injury attorney, both Virginia and North Carolina. Have a blessed day. Joe Miller out.